Good afternoon. Hope I am audible to all of you. Yeah, please reply me on chat box whether I am audible, not audible. Okay, yes. Yeah, thank you so much. Yes. Okay, let us start. Let us start. Actually, in my previous class, yeah, we had a revision on introduction part to accounting, introduction part to accounting. Yes, we'll continue the same. We discussed introduction part to accounting, meaning of accounting, its features or functions you can say, and what are the objectives behind practicing of accounting. Then there are three branches like financial accounting, cost accounting, and management accounting. Then later we discussed about bookkeeping and the types of bookkeeping, and we discussed these all 25 terms that are used in a day-to-day accounting practice. So these are certain things which we had discussed in my previous class. Even I told you people about users of accounting information, users of accounting information. Yeah, this is also we have covered it in my previous class. Today we are moving towards the new concept called, that is, accounting concepts and conventions. Accounting concepts and conventions. It is a revision class, so I am not going to spend much of the time. Already we discussed these all things. Yeah, and I hope you people went through the videos on concepts and conventions of accounting. Yes, and even revision classes videos will be uploaded on YouTube. Later, you people can go through it, no issue. Yes. So let us discuss what is this concepts and conventions. Before that, there may be one two mark question to you people, that is gap. Here you can find it, gap. Here gap stands for generally accepted accounting principles. Generally accepted accounting principles. The name itself it indicates generally accepted, meaning these are certain principles, these are certain accounting principles which are accepted by almost all the companies, and which are practiced by almost all the companies at the time of practicing accounting. They are called as what? They are called as generally accepted accounting principles. So let's see what is the exact meaning of gap. These are certain principles, or you can say these are certain guidelines that are given by professional bodies, that are given by professional bodies in order to record and report business transactions, in order to record and report business transactions, in order to bring uniformity in preparation and presentation of financial statement. In other words, the generally accepted accounting principles are certain guidelines that are given by professional bodies, that are given by professional bodies for preparation and presentation of financial statement, in order to bring uniformity in accounting practice. Understood? So those guidelines, those principles are called as what? They are called as gap, meaning these are universal principles. Universal principles, these are universal guidelines which are accepted and adopted by almost all the companies at the time of preparing and presenting financial statement of the company. Those principles, those guidelines are called as what? They are called as generally accepted accounting principles. Okay. Now, the next term is accounting concepts. Accounting concepts. See here, first we used to call these things as principles and postulates. Later, they started to call them as a concepts and conventions. Again, they made some improvements and they started to call them as a gap, that is generally accepted accounting principles. And right now, the same principles, what we were calling as concepts and conventions, and what we were calling as generally accepted accounting principles, which all are one and the same. The same things are right now called as accounting standards. They are right now called as what? They are right now called as accounting standards. Earlier, they were calling it as a principles and postulates. Later, they made some improvements and they started to call them as a concepts and conventions. Later, again, they made some changes and they started to call them as generally accepted accounting principles. Right now, the same thing is called as accounting standards. We'll discuss about it later. Now let's see what is the meaning of concepts. See here accounting concepts are certain basic ideas. These are certain basic assumptions on which accountant will carry out day-to-day accounting practice. Here, these are certain basic ideas. These are certain assumptions uh, on which the accounting practice will be carried out. For example, we will purchase one asset and will make around 1 crore rupee investment with that particular asset, will make around 1 crore rupee investment because we assumed that we are going to use that asset over a period of time. Understood? That is the reason we made investment up to 1 crore rupee with that particular asset. Meaning here in accounting practice, there will be certain assumptions. There will be certain basic ideas. Understood? Those assumptions, those basic ideas are called as what? They are called as concepts of accounting. They are called as what? It is my humble request with all the participants, please mute it from your side. It is not difficult for me to recognize you people that who has unmuted, but don't, while attending classes, you people should have some common sense. If baby is laughing while taking classes, what it means? You people are in a degree college. It is not school or you can say PU college. It is a degree college. Maintain proper discipline. I don't want to hurt anybody. I don't want to pass much comments and I don't want to criticize. But it is my request, please don't check my patience. Yes, please maintain proper discipline while attending classes. Without my permission, you people are not supposed to unmute it from your side. It must be mute for all the time. It must be mute for all the time. Yes. Hope you people understood what I said about the discipline. Yes. Okay, fine. Yeah, let us continue. Let us continue. And another request is please join the class at a time. And my class strength is quite more. It is around 100. I wish to control my subject, not you people, because you people are enough matured and you people are in degree section. I feel like degree students, they don't want or they won't need much control. Yes, please cooperate. Yeah. Okay, let us start. Let us start. Yeah, we were discussing about accounting concepts. As I told you people that every accountant will carry out accounting practice on some basic ideas or with the help of certain assumptions. For example, we'll purchase one asset, will invest around 1 crore rupee with that particular asset, and will assume that we can use that particular asset for a period of 10 years. With this particular assumption, every year will write off some amount for a period of 10 years as a depreciation, Or I will give one more simple example because you people don't know about depreciation. We'll discuss it in my further classes. I will give one more simple example. We will sell goods to customers on credit basis and will purchase raw materials from our suppliers on credit basis. With what assumption we will purchase goods on credit basis and will sell goods on credit basis? Because we assumed that we are going to carry out this business over a period of time. We are not having any kind of intention and there may not be any kind of necessity to close this particular business in near future. So like this, we will make certain assumptions and we will carry our business activities. Similarly, even accountant will make certain assumptions or he will follow certain basic ideas at the time of practicing of accounting. So those basic ideas or those assumptions are called as what? They are called as accounting concepts. So here is the exact meaning of accounting concept. Concepts are basic assumptions or ideas on which accounting practice is carried out. Or in other words, these are broad working rules for all accounting activities, meaning it is a base. Every accountant must need to follow these assumptions or ideas at the time of preparing financial statement or at the time of practicing accounting. So those basic assumptions or ideas are called as what? They are called as concepts of accounting. Yes, a very important 10 mark question from the point of exam, or they may ask it for 5 mark and they may ask you people to explain 5 accounting concepts, but there are totally 10 accounting concepts and usually this particular question comes for 10 marks. So let's discuss about certain basic concepts that we will follow at the time of practicing of accounting. Before that, I wish to tell you people that there are 10 accounting concepts. There are 10 concepts in the field of accounting. So let us go through those 10 concepts. First one is business entity concept. Business entity concept. We already discussed about a term called entity. What is entity? Entity is nothing but separate existence, own recognition, individual recognition is called as what? Is called as entity. So the basic assumption behind this particular concept is, here this particular concept states that every business enterprises and the person one who own that business enterprise are two separate entities, are two distinct entities. See here, as far as accounting is concerned, you should not treat both owner and business are one and same. You should treat both owner and business are two separate entities. Owner is a natural person, business is a artificial person. So it is as good as two persons. Understood? You are not supposed to treat both owner and business are one and same, especially, or you can say as far as accounting is concerned. So as far as accounting is concerned, here business is completely different from its owner. That particular assumption is called as what? It is called as business entity concept. You people might be heard about certain well-known businesses like Infosys company, Wipro, TCS, understood, Tata groups. Here, those particular businesses are completely different. They are completely separate. They are having their own recognition in society. Understood. Here, we are not supposed to treat those businesses and their owners are one and same. We should treat that business enterprise and its owner as two separate entities. Understood. Meaning, the basic idea behind this particular concept is we are not supposed to club, we are not supposed to mingle. We are not supposed to club both business transactions and personal transactions of the owner. Here, owner is different and business is different. Understood? So, we should maintain their books of accounts separately. We should maintain, or you can say, we should record all business transactions in the books of accounts of business. And we must record all the personal or private transactions of owner in his books of account. We should not record it in the books of account of a business. That particular concept is called as business entity concept. We'll give you one small example. Tata Groups. Ratan Tata, he is the chairperson of that particular company, right? He had purchased a bungalow for his residential purpose. He had purchased a bungalow, or you can say he has purchased a building for his residential purpose. Residential purpose means it is for private purpose, no personal purpose, no. It is not at all related to business. So we are not supposed to record that kind of transactions in the books of accounts of Tata Groups, because here Tata Groups is different and that Ratan Tata is different as far as accounting is concerned. That concept is called as business entity concept. Then second concept is money measurement concept. Here measurement is nothing but it is a scale. Understood? So this particular concept states that we should make an entry for only those transactions which we can measure, which we can express in terms of money. We are not supposed to record the transactions, or we are not supposed to record the events which we cannot measure in terms of money. For example, salary paid can be measured in terms of money, rent paid can be measured in terms of money, goods purchased can be measured in terms of money, goods sold can be measured in terms of money. But there are certain events which we cannot measure, which we cannot express in terms of money. Such transactions are called as non-monetary transactions. So we should not record such kind of transactions in books of account. We should record only monetary transactions. Then what are the examples for this non-monetary transactions? See here, you cannot express the quality of goods in terms of money. Understood? We are producing very high quality of product, but you cannot express it in terms of money. No, you are having a high qualified employees. You cannot express it in terms of money. You are having a very good work atmosphere. You cannot express it in terms of money. So what this particular concept states is, in very simple words, you should focus only on monetary transactions. You should record only monetary transactions, and you should ignore all non-monetary transactions while preparing financial statement. That particular concept is called as money measurement concept. Next one is going concern concept. The name itself, it indicates going concern. It will run, it will go. I mean, it will go in the sense it will run over a period of time, going continuously. So the basic assumption of this particular concept, or the basic idea behind this particular concept is, every business enterprises will run over a period of time. They will continuously operate over a period of time. Business will not be having any kind of intention, and there will not be any kind of necessity to close that particular business in near future. Understood? Will purchase, will make investment in terms of crores. With what assumption? With the assumption that will run that particular business over a period of time. Understood? Will purchase assets by spending money in terms of crore, because we know that we are going to run that business over a period of time, right? So that is the reason we are making investment in terms of crore. So going concern concept, the name itself, it indicates that business will run for a long period of time in future. There is neither an intention nor the necessity to close that particular business in near future. That particular concept is called as what? That particular concept is called as, yeah, which one? Going concern concept. Going concern concept. Okay. So let us move to next concept now. Next concept is accounting period concept. Accounting period concept. Yes. Before knowing the assumption of this accounting period concept, first we should know the meaning of accounting period. First of all, this particular concept is outcome of going concern concept. Going concern concept states that business will run for a long period of time in future. Understood? There is no definite time to close that particular business, and even we are not going to close that particular business in near future. Understood? That is going concern concept. Now, accounting period concept. This particular concept states that, sorry, before that we should know the meaning of accounting period. Here accounting period means business will run for a long period of time in future, no? So the entire life of the business, for example, it will run for a period of 50 years. So the entire life of the business is split into small period, and each period must consist duration of 12 months. Each period must consist duration of 12 months. It may commence from 1st January and ends on 31st December, or it may commence on 1st April and ends on 31st March, ends on 31st March. Understood? The duration of these 12 months is called as what? It is called as accounting period. So accounting period means the entire life of the business, the entire life of the business is split into small period. Each period will be consisting duration of 12 months. It may begin from 1st January and ends on 31st December, or it may begins from 1st April and ends on 31st March of next year. The duration of 12 months is called as what? Is called as accounting period. So what is accounting period concept? See here, in very simple words, this particular concept states that it states that every business organizations must prepare their financial statement at least once in a year. In very simple words, according to this particular concept, every business organizations must know their periodical progress by preparing their financial statement at least one times in a year. Meaning, this particular concept states that once in 12 months, every business must prepare their profit and loss account and balance sheet. By that, they will get to know their periodical progress. That particular concept is called as accounting period concept. Suppose if this particular concept is not there, then we will prepare our financial statement whenever we need, like once in a 10 year, once in a 15 years, or we may prepare it at the end of the business, meaning when business will close. Then what is the use of preparing such kind of financial statement? So what we should do, every year we should prepare our financial statement. By that we'll get to know the variations, or you can say up and downs in the business, and we can have proper control over the activities of the business. That particular concept is called as accounting period concept. Okay, let us move to fifth one. It is cost concept. I will just brief it. You can go through the videos and you people will understand. Every asset will be having two values. One is cost price and another one is market price. See here, at the time of purchasing that particular asset, money that we have paid is called as cost price, and the price that is prevailing in the market, that particular price is called as market price. For example, in the year 2018, we purchased an asset by paying 20 lakh rupee. By paying 20 lakh rupee, that 20 lakh rupee is what? It is cost price. Now, today, the value of same asset is worth rupees 25 lakh, is worth rupees 25 lakh. So cost price is 20 lakh rupee, market price is 25 lakh rupee. So this particular concept states that we must record each and every assets at cost price in the books of accounts, that is in the balance sheet. We must record each and every assets at their cost price. We should not focus on the market price of an asset. We must ignore that market price. Why we should focus on cost price? We should focus on cost price because that particular asset is purchased for use. It is not purchased for sale. If it is purchased for sale, then you should not call it as an asset. You should call it as goods. Are you getting my point? So when you purchased asset, you purchased it for use, so you should record that particular asset at cost price. You should ignore the market value of that particular asset. Understood? When you should focus on market value? When you purchased it for resale. Understood? But here we not purchased it for resale, we purchased it for use. That is the reason we must record each and every assets at their book value, not at their market value. Understood? It is about which concept? It is about cost concept. Yeah. Further, dual aspect concept, very simple. Every accounting transactions will be having minimum two accounts, and those two accounts will, see here, every business transactions will be having minimum two aspects. There will be minimum two accounts. Understood? In that one account will be debited and another account will be credited. Understood? Every transaction will affect minimum two account. It will affect minimum two account. Understood? It affects on the debit side of one account and credit side of the another account. That particular concept is called as what? Dual aspect concept. Dual means two. So every transactions will be having minimum two effect. I never said that there will be only two effects. Keep in mind there will be minimum two effects. Understood? Okay. One is giving of benefit and another one is receiving of benefit. Not understanding how I should convince you people. Might be I have failed in convincing you people. Aniket Gorbade, please mute it from your side. Just a minute, I will mute it from my side. Might be not, it is not Aniket Gorbade, it is mute. Just a minute, it is not difficult, so difficult to recognize. Without my permission, you people are not supposed to unmute it. Please cooperate. Otherwise, I will bring it to the notice of concerned authorities. Yes. Okay. That is what I said. Please allow me to concentrate on subject. I not wish to control you people. I wish to control my subject. Yes. Okay. Yeah. So next one is matching concept. What is the meaning of matching? Dictionary meaning matching is nothing but comparison. Matching is nothing but comparison. So here matching concept means we need to compare. We need to compare, or you can say we need to match the revenue and expenses of the business. We need to compare or we need to match revenue and expenses of the business of a particular accounting period in order to know the profit or loss of the business. In order to know the profit or loss of the business. Here, what is the meaning of revenue? Revenue is nothing but the money that you have earned. Expenditure is nothing but the money that you have spent. So you should compare, you should match both revenue and expenses of particular accounting period. By that you will get to know what whether you are earning profit or you are suffering from loss. That particular concept is called as matching concept. The next one is revenue concept or realization concept. Very simple concept. This particular concept states that revenue must be recorded in books of account only when it is realized, only when it is earned. Understood? If there are any unrealized revenues, it should not be recorded in the books of accounts of a company. For example, goods sold, whether it is on cash basis or on credit basis, in both the situation, revenue is realized. Revenue is realized because transaction is taken place. It means sure we are going to get the money, sure we are going to receive the revenue. Suppose if you received an order, if you received an order in this particular situation, revenue is realized. No, it is not realized because received an order is not a transaction, it is just an event. Understood? When that particular order is executed, then that event will be converted into transaction. So we received an order goods worth rupee 1 crore, 2 crore. We should not record this kind of transactions in books of account because those they are just orders, they are not yet executed. Once they executed, they will become transactions. At that time you can record such kind of transactions in the books of accounts of a company. Understood? So this particular concept states that revenue should be recorded in books of account only when it is realized or only when it is earned. Unrealized revenues cannot be recorded in the books of accounts of a company. That particular concept is called as revenue concept. Next concept is accrual concept. Accrual concept. Please don't compare this revenue concept and accrual concept. Both are completely different. Revenue concept speaks only about revenue, but accrual concept, it speaks about all the transactions, both revenue and expenses. See here, according to this particular concept, we should bring each and every transactions into the books of accounts of a company. Actually, there are two ways for recording of business transaction. One is on cash basis and another one is on accrual basis. What is cash basis? Cash basis means transaction should be recorded in the books of account only when it is paid or received. Only when it is paid or received. But if it comes to accrual concept, here we should record all kinds of transactions. See here, for example, outstanding salary. We are taken service from employees. We are taken service from employees, but we are not at paid salary to them. We not at paid salary to them. This kind of transaction should be recorded. See here, we should bring all transactions. Understood? We should not focus only on cash receipts and cash payments. If transaction is taken place, whether revenue is earned, whether the revenue is received or not yet received, if any of the expenditures are incurred, whether those expenditures are paid or not yet paid, those all the things must be recorded in books of accounts of a company. Here, if revenue is earned, whether it is received or not received, if expenditures are incurred, whether they are paid or not paid, you should record all kind of transactions in books of accounts of a company. That particular concept is called as which concept? Accrual concept. Okay. Then the next concept is objectivity concept. Objectivity concept is also known as evidence concept. According to this particular concept, we should record only those transactions in books of accounts which are having evidence, which are having a proper proof. If there are any transactions which are not having sufficient evidence, sufficient proof, then we should not record such kind of transactions in the books of accounts of a company. That particular concept is called as objectivity concept or evidence concept. For example, we purchased an asset. For that, we should have a receipt, no? Yes, we should have a payment receipt. Then we can record that particular transaction in books of account. Otherwise, what people will do? People will record many more transactions in order to misguide one or other stakeholders. Understood, which are not having proper proof. For example, you wanted to attract investors. So you may show some fake sales in the books of accounts of a company, no? Yes, it will completely misguide the potential investors. So in order to protect such kind of stakeholders, what this particular concept states is we should record only those transactions which are having proper proof or evidence. If there are no proper proofs or evidence, then we cannot record such kind of transactions in the books of accounts of a company. That particular concept is called as objectivity or evidence concept. Hope you people understood this particular discussion that is about yeah, concepts of accounting. Please reply me on chat box. I want few more replies. Okay, thank you so much. Yes, yeah. Okay, let us continue. Let us continue. As I told you people, it is a revision class. I not would like to spend much of the time. I spent almost 1 hour time and I made some videos and already they are uploaded on YouTube. You can go through those videos once again. Yeah, there I had given lots of examples. Just go through it. By that you will get a clear picture about concepts of accounting. Now let us move to next aspect, that is conventions of accounting. What is conventions now? See here, conventions are nothing but these are certain traditions, these are certain customs, or you can say these are certain practices which every accountant must follow. Bhagyashri, which every accountant must follow at the time of practicing of accounting. At the time of practicing of accounting. See here, yeah. What is the meaning of accounting conventions? These are certain customs or traditions or practices which are followed by an accountant and which guides accountant at the time of preparing financial statement of the company. Those customs, those traditions, those practices are called as what? They are called as conventions of accounting. Okay. How there are 10 concepts in the field of accounting, like that there are 4 conventions in the field of accounting. There are 4 customs, there are certain 4 traditional practices which every accountant must follow at the time of preparing financial statement. Those conventions are as follows. First convention is convention of materiality. Second one is conservatism. Third one is consistency. And fourth one is full disclosure. Fourth one is full disclosure. Here, you should know the meaning of these key terms, like what is materiality, what is conservatism, what is consistency, and what is full disclosure. Okay. So let us go through this particular convention. First one, convention of materiality. What is this convention of materiality? Here, materiality is nothing but important, is nothing but significant, which is very essential, which we cannot ignore. That kind of things are called as materiality. So what this particular convention states? This particular convention states that the accountant must focus only on important things, only on significant things at the time of preparing financial statement. He must ignore, he must avoid all unwanted, irrelevant things at the time of preparing financial statement of the company. That particular convention is called as convention of materiality. In other words, this particular convention focuses on quality of information, not on quantity of information. It states that accountant must focus, accountant must concentrate on important transactions, significant transactions at the time of preparing financial statement. If there are any irrelevant things which are not useful, then he should ignore such kind of transactions at the time of preparing financial statement. It focuses on quality, not on quantity. Next one is convention of conservatism. Convention of conservatism. Okay, here what is the meaning of conservatism? See here, conservatism is nothing but we should take some precautions. We should take some cautions. Understood? That is called as what? That is called as conservatism. It is also called as convention of prudence. Convention of prudence is nothing but safe. We should take some precautions. We should try to be safe. It is also known as a safe principle of accounting. So let's see what this particular convention states. This particular convention states that accountant must focus on all anticipated losses. He must focus on all anticipated losses, and he can ignore all anticipated incomes or profits at the time of preparing financial statement of the company. Meaning, at the time of preparing financial statement, you can consider or you must consider all anticipated losses, and you can ignore all anticipated profits at the time of preparing financial statement. That particular convention is called as what? It is called as convention of conservatism, convention of prudence, convention of safe. Meaning, here, anticipated losses are harmful. So we should focus on anticipated losses. No need to focus on anticipated profits because they won't create any problem. They will not be harmful to the businesses. Understood. So this particular concept states that you should focus on anticipated losses and you can ignore all anticipated profits at the time of preparing financial statement of the company. That particular concept is called as what? It is called as convention of conservatism. The next one is convention of consistency. Convention of consistency. What this particular convention states? This particular convention states that according to this convention, according to this particular convention, convention of consistency. Here, first of all, let's see what is the meaning of consistency. Consistency is nothing but uniform, is nothing but sameness. Understood? Consistency means what? We need to maintain uniformity. We need to maintain sameness in accounting practice. So, according to this particular convention, once accountant has chosen any of the method of accounting, if he is chosen any of the technique of accounting, he must follow the same method and technique over a period of time. He is not supposed to change the methods of accounting and techniques of accounting from one accounting year to another accounting year. Consistency meaning stability, uniformity in accounting practice. For example, there are methods of depreciation. Once he is chosen any of the particular method of depreciation, he must follow the same method of depreciation over a period of time. He is not supposed to interchange the methods of depreciation from one accounting year to another accounting year. Once he is chosen straight line method of depreciation, he must use the same straight line method of depreciation over a period of 10 years or 15 years or 20 years, that particular convention is called as convention of consistency. The next one is convention of full disclosure. This particular, yeah, this particular convention is completely opposite to materiality convention. Materiality convention states that we should disclose only important things in financial statement, but full disclosure convention states that we should not hide any information from stakeholders, whether it is important or not important, whether it is relevant or irrelevant. We must provide each and every information to stakeholders. We should not hide anything from the stakeholders. That particular convention is called as convention of full disclosure. Materiality states that only we should concentrate only on important things, but full disclosure convention states that we should not split information into important and irrelevant. We should provide them complete information. We should not hide any information from stakeholders. That particular convention is called as convention of full disclosure. Understood? So this is about what? This is about conventions of accounting. Yes, once again, I wish to know whether you people are following me or not. Yes, whether you people are following me or not. Hope you people are following me. I want some replies. I want some replies. Yes, okay, thank you so much. Yes, as far as attendance is concerned, yeah, I will speak to sir and I will let you know, because I don't know how they are taking attendance in other classes. Yeah, might be they are asking you people to type your number in chat box. Yeah, I will let you know about this particular thing in my next class. Please don't attend classes for attendance sake. Understood? Yeah, if it is a case, then even you can attend it and you can mute it from your side and you can roam somewhere. Purpose is not going to serve. Don't think about that attendance. Don't post your roll numbers on chat box. Let's see this particular thing in my next class. Understood about attendance. Now let us continue with few more things. Yeah, already we discussed about gap, that is generally accepted accounting principles. Now I wish to concentrate on this accounting standards. We'll finish it off in 5 minutes. Yeah. Now let's see what is accounting standards. I was telling you people, no, earlier they were calling it as a concepts and conventions. Later they started to call the same thing as gap, that is generally accepted accounting principles. Now the same things are called as what? Accounting standards. So accounting standards, these are certain written guidelines. Here you can see these are written statements consisting of rules and guidelines. These are certain written rules and regulations, guidelines that are given by certain accounting institutions. Yesterday I was telling you people, no, Institute of Chartered Accountant of India, ICAI. So these are certain written statements consisting of rules and guidelines issued by whom? Why you people are typing your roll numbers in chat box? I made it very clear. No, don't type your roll numbers in chat box. Today I am not going to take attendance. If you are attending class, if you are attending class for the sake of attendance, then you leave the class. Understood? Don't type your numbers in chat box. Yeah, fine. What is the meaning of accounting standards? These are certain written statements consisting of certain rules and guidelines, which are given by professional bodies or accounting institutions like Institute of Chartered Accountant of India. For what purpose? For preparation and presentation of financial statements. Here, first of all, these are certain written rules and regulations given by professional bodies like Institute of Chartered Accountant of India for practicing of accounting or for preparation and presentation of financial statement. They are called as what? They are called as accounting standards. See here, in India, this Institute of Chartered Accountant of India will issue these accounting standards. Understood? Till today, it had issued almost 32 accounting standards, and out of these 32 accounting standards, around 31 accounting standards are in practice. One accounting standard is withdrawn. Understood? And these 32 or 31 accounting standards are applicable to all kinds of companies in India. Understood, which are registered with Companies Act 1956. These are certain examples for accounting standards like Accounting Standard 2, Valuation of Inventory, Accounting Standard 6, Accounting for Depreciation, Accounting Standard 10, Accounting for Fixed Assets. And these are certain objectives behind practicing of accounting standards. First one is to improving the reliability of financial statement. If you followed those written rules and regulations, no, or if companies followed those written rules and regulations at the time of preparing financial statement, then you can trust that financial statement. It will be trustworthy. You can rely. I mean, it will be reliable, which you can trust. Hmm? And even accounting standards helps to bring uniformity in accounting practice, meaning there are 31 accounting standards and all the companies are practicing or following those all 31 accounting standards. So you can compare one company's accounting information with another company accounting information. Understood? Because there will be uniformity in accounting practice if we followed these accounting standards at the time of preparing and presenting financial statement. The next one is it helps in preventing frauds and manipulations in accounting practice, very major objective. Then even it helps to simplify the accounting information. So these are four important objectives of accounting standards. This is all about accounting cycle. There are 5 phases. First one is business transaction, followed by journal, journal to ledger, ledger to trial balance, trial balance to final accounts. Yes, these all are simple concepts. Okay. Yeah, this is all about what? This is all about concepts and conventions of accounting. Yeah, I took almost 48 to 50 minutes class. What I feel better in my next class will go towards another important concept called accounts. Maybe I need 2 more classes for complete this revision. One class I need for this accounts, then another class I need for this journal. Another class I need for what? I need it for journal. Yes, hope you people understood whatever we have discussed in today's class. I want some replies from you people on chat box whether you people understood these concepts and conventions, gap and accounting standards or not. And they are very important from the point of examination. No need to bother about your attendance. Don't worry, I will give good attendance to you people, but please be attentive. Yes, and please attend classes to learn the subject. Yes, so let us end the class now. If you people are having any queries, you can post message on chat box. Otherwise, you can post message on WhatsApp group. We will discuss it. Yes. Hope you people are not having any doubts. There are no queries. Let us end the meeting now. Thank you so much.